Good morning, traders. It is 7:42 a.m. Chicago time on Wednesday, the 7th of September, 2016. Thanks for joining. And this is another pre-recorded session of the Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Key news overnight comes out of Australia. Australian economy grew at 0.5% Q on Q in April through June. The reading was a bit below the 0.6 growth expected, but more significantly, it marked Australia's 25th consecutive year without a recession. The Australian dollar's just slightly down. British manufacturing fell sharply in the wake of Brexit. Data from the Office for National Statistics showed manufacturing production fell at 0.9% in July, missing expectations of 0.4% decline. It should be noted that production fell 0.2% in June and 0.6% in May. Other than that, the key announcement today comes from Apple. The tech company is expected to launch the iPhone 7 and an upgrade to the Apple Watch. Keep an ear out. The announcement comes out at noon Central, 1 Eastern. There's probably going to be a live feed for it. And then as far as what we've got this morning, let me see. Yeah, as far as what we've got this morning on deck, we have a 9 o'clock Central, 10 Eastern U.S. JOLTS job openings number for July, expecting 5.625. And then we have, and that's really it, actually. Don't see anything else on the calendar. We do have Fed speaker, well, at 8:15 Central, about a half hour from now, we get Bank of England's Carney, Cunliffe, and Forbes, McCafferty, and McCafferty. We get Fed Speaker Lacker again, who's been talking a lot Friday and yesterday, a non-voting hawk. And then we also get Fed Speaker George, a voting hawk. They stand in front of the House Financial Panel at 9 Central, 10 Eastern. It's a half hour after the open. And then at 1 Central, 2 Eastern this afternoon, we get the U.S. Fed release, the Beige Book. That has moved us a little bit the last couple times. So key elements, 9 Central, 10 Eastern, we get the job openings number. At 8:15 Central, 9:15 Eastern, we get the Bank of England speakers. And then at 9 Central, 10 Eastern, we get Fed Speaker Lacker and George. And then at 1 Central, 2 Eastern, we get the Fed's Beige Book. Let's take a look at trading for yesterday. Here's what we had for a primary hypothesis. For those who watched the video, what's going on here? Interesting. Okay, so I've lost my cursor somehow. There it is. So as far as what was expected yesterday versus what we got, we were looking for yesterday. We're looking for an open auction in the morning. We expected a drop into the 21.75, 76 area. If it does not hold that 21.75, 76, of course, we look for a test down into the HVN below, which was at 21.75. But overall, we're looking for the market to push higher into 21.86. And the secondary hypothesis, man, not sure what's going on here. I've just lost my cursor. I don't know what's going on. All these technical issues. All right, hang on. Okay. Now, the secondary hypothesis, there it is, looking for a test higher into the overnight high, an attempt at the value high, and then a rotation down into the 2172 25 again, and that didn't happen. What did happen yesterday was this. Let's see. Here's what went on yesterday. There it is, an open auction in the morning. Oh, yeah, it's because I'm home. An open auction early in the morning with a downward skew. We moved back into value. The market opened higher than when I did the trader bite. It moved down into this point at this LVN, tested, rotated up, and then tested near lows. But we ultimately ended up pushing to the 2186 and a quarter, 2186 and a quarter. And 2186, as you saw in the prior slot in the prior screen, 2186 was the key target. So hypo 1 was on the nose. It did drop below. It did drop below the expected test area. The only the key the key trades yesterday were was the wrong spot. Sorry, I'm not able to see my cursor. Was the rotation down on the 6-point rotation down, giving us a continuation trade from there against the mid. It was really tough jumping on that. And then the second trade that came along was right here. 2177 tested 3 times, making a triple top. And if you're into chart patterns, this is an inverted head and shoulder. Higher lows 74, 75, 74, 75, and then it pushes through the mid, a small retest right in here. Sorry, I can't see my cursor on my screen, so I have to kind of find it. Small retest here, and then it took off, and then a nice little chance to push towards the prior day's high, which was 83.75. It pushed to 83.50. Right there. Oh my God, this is terrible. And before once it did that, it pulled back. It had a very, very high kurtosis here. You could see that it built a huge point of control near the high, and generally what that shows is that there's likely to be energy dissipating to the upside, and that's what I tweeted out live on Twitter yesterday before that happened, and the market ended up following through with that. So that's where we are. As far as the big picture, this is really aggravating that I can't see my cursor on the screen, so it just makes it hard to navigate. So overall, just so we would know where we are, here we are again. We're still in this big balance zone since July 12th, and we've had some pretty good range days last week. But overall, the numbers you need to remember are 2179 and a quarter. On the upside, 86 was key, and then below that, 72. This area right here, 72 and a half, is another area to watch out for. It separates the upper and the lower distributions from each other, and any trade above here is likely to test that 79 and a quarter. If we push away from the 79 and a quarter like we're doing now, we're likely to take out the all-time high. So that's the big picture on the S&P. This broadcast is not very coherent today. I apologize, but I need to see the settings here and what's causing this. Overnight, we closed near highs yesterday. The expectation is for the market to continue higher. However, we did tag a key test area, so the probability for continuation is not that great. We also did not finish with a very, very strong high volume node at the top like you see here. And so the trade overnight remained near that high pretty much the entire night and retested the 86 and a quarter. So the overnight high and yesterday's high are equal and has dropped since back to the point of control. You can see that the overnight low is exactly 21.81 and a quarter, which is yesterday's point of control. And this market is likely to trade through this profile today. So to get down to it, let me just see what I can do about this cursor because I cannot. Hang on a second. Sorry about this. Okay. So let me use this other tool to draw with since I have no clue where my cursor is. There we go. So in extending today's, in extending the profile forward to include yesterday's action, we see that again the point of control is steadfast at 79 and a quarter, and we are just above it. We're trading just above it, and we're likely to revisit the 79 and a quarter today. That's the expectation. The primary hypothesis for today, if we open here, is another open auction. The expectation is for the market to move down, retest the 79 and a quarter. That's a low volume node from yesterday right here, and then I'm looking for to reattempt a push into the prior through the point of control. I'm looking for failure and a retest of this high volume node from yesterday. I'm looking for it to push down into the 75.50 from about 85 to 75.50. That's what I'm looking for hypo 1. If we do get an extended push, then it'll likely be a pullback to 79 and a quarter, and again a retest of that 72 and a half area. That's the primary hypothesis. The secondary hypothesis, an open auction in range, a push down into the point of control, an attempt lower, looking for that low volume node, and then I'm looking for buyers to step back in to take it back up, and then to start to continue the move towards 21 through 2186 towards 2190. Looking for a chop most of the day. 2190 is the target for hypo 2. And then, hypo 3 is essentially in between where the market just sits sideways. Remember, we do have a small, we don't have a gap zone below us, but we have an area beneath us here that remains unauctioned. We have a gap close right down into 2166.75 that we left behind on Friday on the non-farm payrolls. That could act as a magnet for hypo 1. But overall, hypo 3 is expected to go sideways and stay within the boundaries of the prior day. And that's how things are shaping up. So that's what I have for you. I'm also losing my voice. Excuse me. That's what I have for you for today. Again, I keep having to do these pre-recorded sessions until my bandwidth is repaired and is full speed. Good luck, and hopefully you got something out of this. Sorry about the issues. Take care.